What's good, guys? It's L2 Trades back at it with another YouTube video. Today I'm going to be going over the trades that I took last week, um, from Monday, March 16th to the 19th. Um, Unfortunately, I could not film my trade recaps because I was on vacation and I had my MacBook, so I didn't really it wouldn't let me download the OBS software. So unfortunately, I have to make this now. Sorry for being a little late, but we're still doing it and getting that grind in. So um, Monday, what I took is I saw that we did have sorry, I marked out 4 hour highs and lows, session highs and lows, and 1 hour highs and lows. Um, I saw that the 4 hour there was this high right here, right? I, um, I kind of thought that maybe we see this reverse, but as seeing this big bullish candlestick, I was like, okay, we're gonna break structure. So that is not a proper liquidity sweep because we broke structure to the upside. The most recent liquidity sweep that I saw was a sweep of these lows and these lows. We took out these lows on ES, but we did not on NQ, forming a bullish S&T divergence. So what did I do? I wanted to trade NQ for the because it was the leading index in this bullish S&T divergence. Okay, so what I did as of market open is I wanted to see low time frame manipulation because we did have our liquidity sweep in the previous session. Okay, so as the market opened, we came down. This was our perfect chance for our um, low time frame manipulation, right? I believe I don't know if we had a bearish SMT or bullish. I mean, no. Okay, no, we did not have a bullish SMT. Sorry. Anyways, we manipulated on the low time frame, so that was a check off our list, our 5 minute low time frame manipulation. And as we manipulated those lows, we also had a 5 minute breaker structure um, from this bullish candlestick here. Once we broke structure, I saw that we formed this 5 minute bullish for value gap. Once we filled this for value gap, I was like, okay, this looks good. This looks 2T. I'm going down the 1 minute time frame. I'm looking to enter right about now. Um, so what did I do? I saw this huge candlestick. I was like, okay, we got this big candlestick. We're definitely gonna break structure. So I entered a little bit early. I entered probably around like right here-ish, I'd say. I answered right there, and I set stops underneath this 5 minute fair value gap, and then I set take profit one at these previous 5 minute highs, just because we did not have many draws on liquidity to the upside. We really only had um, these two significant draws, so I was like, okay, there's really only two places we could target. So I targeted these 5 minute highs, and then the rest at previous day highs. We ended up hitting TB1, and I set stops to break even, and we ended up getting stopped out at break even, which we took a W for that day. So I was very, very happy with that. I'm very, very proud of that. So yeah, um, going in onto the next day, Tuesday. I did take a trade on Tuesday. Okay, so what we're gonna do is we're gonna mark out our previous sessions right real quick right here. I kind of, sometimes forget um, where I got my exact entry point, so let me find it real quickly. Okay, okay, so let's mark out our session highs, our session lows really quick right here. Okay. Go to the 4 hour time frame and we marked out our highs and our lows. Bang. 1 hour. Bang. So coming in the day, I was overall bearish. Why was I bearish? I was bearish because um, we took out a bunch of hourly draws on liquidity as well as previous day high, which is a significant draw on liquidity with no retrace back down. So I was like, okay, I think what today's gonna do is we're kind of due for a retrace. I want to see shorts off of this. You know, we took out low resistance liquidity, and we took out previous day high, um, which I was very bearish for the day. I did take this trade on the S&P 500, so let's go to there. So I was overall bearish on the day after taking out all those highs. I believe we did have an S&T divergence. If correct me wrong. Um, yeah, we did. We had it. I think we had it from these highs. Alright, never mind. Oh yeah, we did. Not. Sorry. Okay, kind of hard seeing from the naked eye. But anyways, so coming into the day, I was bearish. I wanted to see shorts. So, what did I want to see first? Obviously, I wanted to see some form of manipulation on the low time frame, some form of, you know, something, right? So, coming into this, we. Alright, my bad, guys, we're back. Um, I had a little bit of confusion there, but we're back. Okay, so as we're going, market opens and we manipulate on the low time frame, manipulate these 5-minute highs. Why, would you ask? Wouldn't this be a break of structure? No, this would not be a break of structure. Why? Because we are already in bullish market order flow. So this would be a 5-minute high. We manipulated this high, which is our 5-minute low time frame manipulation when market opens. And then I saw that we had a 5-minute break of structure right here. Once we had this 5-minute break of structure, I saw we formed some fair value gaps, one right here, and one right here. Okay, so once we had this gap, I saw that we tapped into it. So I was like, okay, awesome. I'm going down to the lower time frame and I'm looking for a 1-minute change in order flow. So as we tapped into it right here, I saw that we had a. Give me a quick second. I saw that we had a 1-minute break of structure right here after tapping into this gap. So once we broke structure down to the 1-minute, I entered about like right here. So we got that entry. I set stops above this fair value gap, and then I set TPs down at these lows right here. Um, sorry, no, I did not set TP above that fair value gap. I set TP above this fair value gap because if we inverse this gap, then that would invalidate my trade. Why I didn't set it at this one is because we always have a chance of filling this one. So if we inverse that, then that would be uh, um, a invalidation, which as you can see, we did not quite reach this, but we ended up pushing up, pushing all the way back down, and hitting full take profit. So that was a great trade, an amazing trade to take. Very, very happy with that. Now, going on to Wednesday, I did not take a trade. I did not take a trade because we had FOMC, so obviously price was kind of choppy and did not have any significant moves. And then on Thursday, we did in fact take a trade. Um, so yeah, let's get right into that as well. So we come out and we mark out London session, Asian session, pre-market, and New York market open. Let's do that really quick, and let's mark out our session highs and lows. Let's mark out our 4-hour highs and lows. And let's mark out our 1-hour highs and lows. Okay, so coming into this day, I saw that we had London manipulation and New York reversal. Yes, we did take out this high, but we came down and took out this hourly draw on liquidity. So I was bullish for the day because of that. Most recent draw on liquidity, as well as taking out Asian chest and low. So coming into today, I was London manipulation, New York reversal. I was overall bullish. I wanted to see longs, and yeah. So coming in the day, as market opened, we saw I needed low time frame manipulation because our sweep was the prior session. I saw market opens and we come up and we manipulate this 5 minutes low time frame draw on liquidity. Once we had that, I saw that we had a I saw that we had, this kind of significant move up. We did break structure. No really retraces back into anything until, we inverse this. So I was like, okay, well, crap, right? Um, so we inverse this for value gap, but as you can see, we did in fact. So we had our 5 minute low time frame manipulation. We had a 5 minute inverse gap right here. I did take the trade on NASDAQ. So let's go to that. I thought I took it on ES. Clearly I was wrong. I took it on NASDAQ. Um, yep, this looks more right. We had a 5 minute inverse for value gap right here. It's small, but doesn't really matter. And then we had our 5 minute retrace into equilibrium right here. And then we had our 1 minute change in order flow. So I got a little bit confused there because I thought I took the trade on the S&P 500, which we did not inverse gap, but I took on Nasdaq actually, and we did inverse gap. So I was kind of a little bit confused, but no. So I entered about right here, stops below second low, and then I set take profit. I was going to set take profits one right here, but honestly, it wasn't a good risk to reward ratio, and I only entered on one contract, so I really didn't want to do that. So I set take profits here. We ended up getting stopped out, but the rest of our position would have hit take profit, as you can see over here. So this trade I took, I was bullish for a day. I took the trade on Nasdaq. We saw that we had 5 minute low time frame manipulation right here. We saw that we had a 5 minute inverse value gap right here. We saw that we had 5 minute equilibrium right here. Once we tapped the equilibrium, went down to 1 minute. I saw 1 minute break of structure. After that, entered stops under a second low, and then exit at previous shots liquidity, which was my strategy to T. Um, it was a great trade. I was very, very happy with this. Price was just, very, very, very just choppy. Like, no, big moves up or down. So that's kind of why it was just kind of a bad day to trade. But overall, it was our strategy to T. I followed my rules and my plan. I used proper risk management. I was very, very happy with that trade and very, very confident. And yeah, just another day of probability, and yeah, I have high probability in these markets, and yeah. So posting this on March 23rd. I did not take a trade today because my strategy didn't present itself, and I was very disciplined and patient. But yeah, we'll get after it this week, and hope you guys have an amazing week. And sorry for the longish video, but yeah, peace out, guys.